Hello and welcome to Camel Finance. I'm your boy Camel, and today I want to give you some Bitcoin HOPIUM. Looking at the chart, you can see that we are still sideways. I think things are starting to feel a little bit like we could be setting up for a giant crash. Whether we'll get that or not, I don't know. If you watched yesterday's video on the charts, that will fill you in on my opinion on the market at the moment. Overall, remaining calm and neutral until we get a decision. Looking at the dollar, this is where the Bitcoin HOPIUM starts for me. So the dollar has been on this enormous tear, and if I zoom out a bit here, you'll see that we are dangerously close to resistance, to making what I believe will be a third high. Of course we could crack this, and that could spell trouble for markets everywhere. But I think what's more likely is we're going to reject off of this and form a third high. And so let me show you what this might look like, or at least what happened historically. You can see the dollar here at the top, first peak, second peak, coming in for that third peak. And you can see the Bitcoin chart in blue underneath. Every time the dollar made one of these big peaks, every time the dollar made a major high, Bitcoin proceeded to go on an enormous tear. Same here. So it stands to reason that if we can produce this third lower high and get rejected at resistance, like this, and then down here, it stands to reason that Bitcoin is going to do Bitcoin things. If you've been watching the channel, you also know we've covered this chart a few times. This is the government 10-year bond yield. Is it topping? I don't know. But one thing we do know is they will keep raising rates until something breaks. Is anything broken yet? Well, I think we are starting to see it break. The point I want to make here is, ever since 1981, every time the Fed raises, goes on a rate rising cycle, they have to step in and do a dovish pivot sooner and sooner. You'll notice all of these highs are lower highs, except for maybe this one might be marginally higher, and maybe this one goes marginally higher, but ultimately I think they're about to have to step in. Things are about to break, and when they break, of course, they have to step in and do a pivot. They have to do a dovish pivot, which means lowering interest rates. It means stopping to run off their balance sheet, and most importantly, it means printing more money to prop everything back up again. So this is covered. My thesis for this is covered in the Fed is about to pivot, this video here. So if you haven't seen that, I'll put a card in the top right of the screen now. Go and watch that, and you'll see exactly what I'm talking about. So on this channel, I've been talking about inflation for a long time. In fact, pretty much every video I talk about it. And you might be thinking by now, Camel, why do you keep going on about inflation? But this is a really, really interesting visual for it, for those of you that are visual learners. And this is why I go on about it so often as well, because it's really cruel. After 9 years, a $1 million pension or retirement fund, whatever, after 9 years at 8% inflation, we only have 472k in purchasing power. But of course, if you've seen our previous video, the CPI lie, if you haven't, go and watch that, then you'll know that the real inflation is significantly north of their 8% reported figure. If you calculate it by the 1990s rules, it comes closer to 15%. And if you use the 70-something rules, then you get a 20-something% figure. But just using this 15% figure, in 9 years, that same $1 million retirement fund, or cash in the bank, however you want to hold it, that $1 million at 15% after 9 years becomes only $213,000. So you're losing just shy of 80% of your net worth by holding cash, right? And this is why everything keeps going up at the rate it's going up. The real number is, I'm sure, north of this as well. It's north of 15%. And people just don't understand how much they're being robbed. And this is why I talk so passionately about this. This is one of the main drivers for me starting a channel, to get this information out there. Because I do understand this. I completely understand this. And it's cruel. And people just don't realize. They just don't understand how severe this inflation is. This is also why I'm so bullish on Bitcoin for the long term. Because Bitcoin is hard capped. It has a hard cap supply of 21 million. And therefore cannot be inflated. once people come to understand how damaging this is, I think there's going to be an enormous demand for money that cannot be inflated the way that fiat currencies can. And so with all that said, let's continue on this Bitcoin HOPIUM. T-Analyst is one of the best bullish chart producers on Twitter. So I've got a few charts from him, I think 4. Starting off with this one, you can see this is the SPX's Williams Ultimate Oscillator, and it's just flashed. Apart from this time here, where the oscillator flashed and we actually went lower before we went higher, every other time that this oscillator has flashed, it's led to enormous upside for Bitcoin. It's also been surprisingly good at calling bottoms, and very recently we have had a flash right here. So this doesn't necessarily mean we're going to go straight up from here, but it does mean that we are likely close to a bottom and about to start another major uptrend. Similarly, T-Analyst has used the SPX here and created this sort of zero line, and anytime the SPX dips below and recovers, this has coincided with bottoms for Bitcoin. So you can see that every time we get one of these, every time we breach this line and then recover it, Bitcoin moves significantly higher. Here it is again, and we have just had one of these. And so another bullish looking chart from T-Analyst is whenever we get this breach and recover, it usually sets up the cycle. We come down, breach and recover, and it sets up the third cycle. Breach and recover, fourth cycle, and now we have this breach and recover. Now, does this mean that we can't go lower in the short term? No, of course not. But what it does mean is, historically speaking, we are set up for a fifth cycle here. So one more from T-Analyst. We've got back in July of 2020, we had 3 touches starting in July and then moving on. 3 touches of this support at this angle before starting a big parabolic uptrend. And we now have 3 touches on the next level of support with the exact same angle. So does this mean we're about to go up? I don't know, but I think coupled with everything else you've seen so far, that things are perhaps looking more bullish than just simply looking at this chart might tell you. So a bit more HOPIUM for you here. The percentage of the Bitcoin supply last active 1+ years ago has just crossed 64% for the first time ever. So we have an all-time high in the supply last active 1+ years ago. If you're not sure what this is, or just to be clear what this is people that are buying Bitcoin and withdrawing it. They are holding on to it and not selling it for at least 1 year. And the number of people that have decided to buy Bitcoin and hold it for at least 1 year has just reached an all-time high. We are at 64%. That is an enormous amount. And you can see last time we had this sort of uptrend that rounds off and then starts to decrease, Bitcoin again did enormously bullish things. So are we going to get another orange hump form here whilst Bitcoin does Bitcoin things? Quite possibly. And lastly, I found this and I thought this was amusing, so I'll end on this. The IMF director sums it up. We printed too much money and didn't think of the unintended consequences. We are acting like 8-year-olds playing soccer chasing the ball. Now when I read this, I thought that this was from Plan Marcus. I thought these were his words. I thought he was paraphrasing, mocking, using an analogy, whatever. I didn't realize, as you're about to see, that these are direct quotes. These are direct quotes from the people on the IMF. So I hope you enjoy this.
I think we are not paying sufficient attention to the law of unintended consequences. We take decisions with an objective in mind and rarely think through what may happen that is not our objective. And then we wrestle with the impact of it. Take any decision that is a massive decision, like the decision that we need to spend to support the economy. And at that time, we did recognize that may lead to too much money in circulation, too few goods, but didn't really quite think through the consequence in a way that upfront would have informed better what we do. And I subscribe entirely to what Christine said about climate shocks. We are already out of time. And the fact that whenever something hits us, we forget about this other crisis is incredibly troubling. The fact that we are, I'm sorry I'm going on here, but I'll finish in a second. We act sometimes like 8 years old playing soccer. Here is the ball, we are all at the ball, and we don't cover the rest of the field.
I mean, these are the people in charge of our monetary policy. So do what you want. This is not financial advice, but I am buying Bitcoin. Until next time, I'm your boy Camel. Take care.